There's a one-page form in Pennsylvania that lowers your school property tax bill every single year. It's free to file. There's no income limit. The money comes from casino gambling revenue, and most Pennsylvania homeowners have never filed it. I'm Jim Stevenson, a realtor here in the Philadelphia suburbs, and this is the form I tell every buyer to file the day their deed gets recorded. The program is called the Pennsylvania Homestead Exclusion. You've probably heard it called the Homestead Exemption. Both terms get used, and I'll use both today. Just know that on official county forms, you're looking for the word exclusion. An exemption removes something from taxes entirely. An exclusion just reduces the assessed value your taxes are calculated on. Small difference in language, big difference legally. Here's how it works. Every year, Pennsylvania collects tax revenue from casinos and online gaming across the state. For the 2025-2026 year, that number hit over $1 billion. The state takes that money and distributes a share to every school district in Pennsylvania. Each school district then uses its allocation to reduce the taxable assessed value of every approved homestead by the same flat dollar amount. So your assessed value drops before the school tax rate gets applied to it. The rate stays the same, but because it's being multiplied against a smaller number, your bill comes out lower. The savings depend on which school district you're in. Statewide, the average is about $386 a year. Some districts come in under $200. Others push past $700. Where you land depends on how much gaming revenue your district received and how many homesteads are sharing it. What that means is a homeowner who filed the form 10 years ago could easily have saved $3,000 to $4,000 by now. A homeowner who didn't file has paid every dollar of that. The only difference is whether someone filled out one piece of paper. This is one of the first things I walk buyers through after closing. 5 minutes of paperwork that pays you back every single year. So that's what the program does. But here's the part that actually costs people money. The reasons homeowners never file in the first place. The biggest one is that people assume it's automatic. That when you buy a house and record your deed, the county applies the exclusion for you. They don't. You have to file a one-page application with your county's Board of Assessment. Nobody does it for you. Not the county, not your title company, not your lender, and not your realtor. And that leads straight to the second mistake. People assume their mortgage company handles it. Your lender manages escrow, they pay your tax bills, but they do not file the homestead exclusion application. That's 100% on you. Third, and this catches every new buyer, the previous owner's exclusion does not transfer when the property changes hands. The old exclusion comes off. You file your own application from scratch. And fourth, people confuse this with the property tax rent rebate program. Completely separate. The homestead exclusion lowers your tax bill before it ever gets mailed to you. No check shows up. Your bill just arrives lower. The rent rebate is a cash refund program for seniors 65 and older, widows and widowers 50 and older, and disabled residents with household income under about $48,000. Separate program, separate eligibility, separate application. There are two more I hear all the time. People think filing for this lowers their home's market value. It doesn't. It only reduces the number used to calculate your tax bill. Your sale price is completely unaffected. And people who've put their home in an LLC find out the hard way that LLCs don't qualify. Pennsylvania law requires the owner to be a natural person. An LLC is a legal entity. The exclusion comes off, and most people don't realize it until the next tax bill shows up higher. Last spring, I'm on a Zoom call with a couple who'd been watching the channel. They were thinking about selling their place in Doylestown and moving up to something bigger in Central Bucks. So they reached out to talk through the numbers. She had a folder with her, color-coded tabs, every closing document organized by category. This was someone who did her homework. I asked her to pull up her most recent school tax bill so we could look at what the monthly carrying costs would be on the new place versus, what they're paying now. While she's looking for it, I pulled up her property record on the county assessment site, and the homestead field said no. They'd owned the house for 3 years. That's roughly $770 they just never got back. She looked at me and said, "Nobody told us." Her husband pulled out his phone and started searching for the form before we even finished the conversation. They filed it that week. And when we found their next house, it was the first thing we took care of after closing. The reason I'm telling you that is because this happens all the time. Smart, organized buyers who did everything right, they just didn't know the form existed. Now you're probably thinking, if the savings are only a few $100s a year, is it really worth the effort? That makes sense, but here's the thing. Fill out one form, one time. you mail it in, and you never touch it again. The savings show up on your school tax bill every July for as long as you own the house and live in it. $300 a year for 15 years is $4,500 for 5 minutes of work. There's no financial decision in homeownership with a better return on your time. And the part that makes this even more useful is when you combine it with the other tax strategies that apply to your specific town and school district. And if you want me to run that full tax picture for the towns you're looking at, book a call using the link in the description. I'll pull up the actual tax rates, show you what the homestead exclusion saves in each district, and break down your real monthly cost so you're comparing apples to apples before you tour a single house. And if you're still early in research, grab my free Philadelphia Suburbs relocation guide using the QR code on screen. All right, so now you know what the program is and why most people miss it. The next part is the one that actually matters: how to file, where to file, and the deadline you cannot miss. March 1st every year, that's the statewide deadline set by state law. The state has confirmed that not even the governor can extend it by executive order. Miss March 1st and you wait a full year. No exceptions, no grace period. The application is 1 page. You need your property's parcel number, which is on any tax bill. You sign it certifying the home is your primary residence. No fee. Everything I just covered applies to every county in Pennsylvania. The form, the deadline, the eligibility rules, all the same statewide. But how each county actually handles the process is where it gets local. I work in the Philadelphia suburbs, so let me walk you through exactly how this plays out in Bucks, Montgomery, Chester, and Delaware counties. In Bucks County, you download the form from the Board of Assessment Appeals website and mail it or hand deliver it to their office in Doylestown. One thing to watch in Bucks: any change in your deed, including a refinance, removes the exclusion. You have 45 days to reapply. Montgomery County works the same way. Download, print, mail, but Monco has a specific warning about USPS delays. If you're mailing close to March 1st, go to the post office counter and get a hand cancellation or certificate of mailing. A late postmark means a denied application. Chester County's window opens December 15th and closes March 1st. They're legally prohibited from processing anything that arrives after the deadline. Delaware County is the unusual one. Instead of downloading a form from the county website, you contact your local school district and they give you a pre-printed application generated by the county. And Delco requires original signatures. No faxes, no emails. Once you're approved in any county, you don't reapply every year. The exclusion renews automatically as long as you own the home, live in it, and the deed doesn't change. Now let me give you the actual savings numbers for some of the biggest school districts in the Philadelphia suburbs. Central Bucks and Bucks County comes in at about $257 a year. Souderton area in Montgomery County, about $338. Tredyffrin Easttown in Chester County, around $344. And William Penn in Delaware County is closer to $781. Those numbers change every year based on how much gaming revenue the state distributes, so don't treat them as permanent. But to give you a clear picture of the range, quick note: if you own 10 or more acres of agricultural land, there's a companion program called the Farmstead Exclusion. Same form, same deadline, same process. Check the Farmstead box when you file. So how do you know if you already have it? Every county has an online property records portal. Search your address and look for a homestead field. If it says yes, you're enrolled. If it says no, you've been leaving money on the table, and now you know exactly how to fix it. And if you're in Philadelphia, your program is completely different. Philly calls theirs the Homestead Exemption. It reduces your assessed value by $100,000 and saves roughly $1,399 a year. Different deadline, different office, different rules. Don't use Philly numbers for the suburbs. They're not the same program. Now you know about the one form that lowers your school taxes for as long as you own your home. But here's what most people don't realize next. Your property tax bill is just one of the financial traps hiding in the Philadelphia suburbs. The school district your agent told you about might not be the one your kids will actually attend. The inspection your home inspector ran might have skipped the one test that saves you $100,000. And the tax jurisdiction you're buying into can change your monthly cost by $630 depending on which side of the street you're on. Watch this video next because I'll walk you through every one of them before they show up on your closing statement. Thanks for watching, and I'll see you next time.